Welcome back, ladies and gentlemen, on this wonderful Wednesday for what is going to be nothing short of another jam-packed daily cryptocurrency market update with yours truly. I'm wishing you all a wonderful day wherever you are and whatever it is you are doing. As always, we've got quite a lot to get into, and we're going to be starting things off with a huge win for the cryptocurrency industry as the SEC has dropped their investigation in regards to Ethereum. Now we know an Ethereum spot ETF is coming and more altcoins will follow. And we are very lucky, I believe. I know we sometimes get sort of a little bit pessimistic in the short-term downside, but we are very lucky to be speculating on this industry at a time that we are, because ultimately this industry hasn't even been allowed to become one yet due to the sort of hindrance and lack of adoption in the United States, basically as a result of the SEC. So we are going to be starting the video off there. We are then going to be moving on to a little bit more macro-y stuff, because crypto, and we've seen this really, isn't going to do well in an environment where things aren't generally, and there needs to be liquidity for that. There needs to be a good sort of macroeconomic picture. And I think we have that. I think PMIs line up, global liquidities line up, where the Fed's at with their balance sheet lines up. We're going to be talking about that in this video. We'll also be talking a little bit about the reverse repo. We're also going to be talking about interest rate payments in the United States now being get your words out, all in, now being worth more than the defense budget within the United States. The Fed need rate cuts. The US government need rate cuts more than anybody. And the question is, if the Fed's balance sheet is now running off, what's the correlation with them adding to their balance sheet, which I think they're going to do, which is signaled in the bond market? And what does that mean for the broader asset classes out there, and how's crypto going to fare? Because Bitcoin has been pulling off, Total 2 has been pulling off, which is the altcoin market, against both gold, the NASDAQ and the SPY, but they are in broader uptrends against those. So when things get rocking and rolling again, when we get a little bit more sort of clarity on the situation that we're in, Jerome didn't do anybody any favors, but when has he ever? Things will get rocking and rolling again. And it's about being able to withstand, have that bigger picture, which we always try and sort of impress on people here at Allincrypto in regards to where this market is going. We are not trying to kid ourselves on and get people in at the top of every little peak and out at the bottom of every little pullback. I think that's unrealistic for most people. What we're trying to do is help people realize when it's go time, which we think it is for the cryptocurrency space. It's a volatile space. There's always a little bit of churn and chop in regards to making that transition. And ultimately, I think, we have some great times ahead of us, and we are in a bull market broadly for risk. The altcoin market just needs to sort of wake up a little bit, like what Stan Druckenmiller has done, going from Nvidia down to the IWM, which is the Russell 2000. And I think the largest stock there is about 40 billion. So a lot to cover. Let's dive into it all. And let's start things off, as promised, with the SEC news. So the US SEC closes investigation in Ethereum 2.0. So Ethereum generally, actually, at this point. Major win for the cryptocurrency industry. Let's look at the quick take. Consensus said the US Securities and Exchange Commission has notified the company that the agency is closing its investigation into Ethereum 2.0. The SEC's decision came after Consensus sent a letter requesting clarification of Ethereum's category in the approval of spot Ethereum ETFs. They're totally contradicting themselves, just like Biden raising funds. And I say Biden, I'm talking about his organization, his campaign, requesting to raise funds with Coinbase, somebody that the SEC is currently suing. That makes no sense. The SEC, instead of giving money back to the people that got absolutely destroyed and had their lives turned upside down by Terra Luna and all that nonsense, they're the only ones getting the $2 billion. No one else is. And actually, I think Montenegro's PM was actually caught up in that whole thing. There was some news about that earlier today, which we're not going to cover. So Ethereum survives the SEC's Consensus, wrote in an X post. Let's dive over to this post. So this is from Consensus. It says Ethereum survives the SEC. Today we're happy to announce a major win for Ethereum developers, technology providers, and industry participants. The enforcement division of the SEC has notified us that it is closing its investigation into Ethereum 2.0. This means that the SEC will not bring charges alleging the sales of Ethereum are security transactions. Think about the broader ramifications here for the crypto space more generally. If you're going to let Ethereum off the hook, you have to let the others off the hook. Now, there's no doubt that some cryptocurrencies do venture into the avenue of securities, but that's going to have to be done on a merit-by-merit basis. broadly, a lot of cryptos that the SEC has gone after exchanges for selling in the name of them being unregistered securities. This kind of clarifies that they're not. And you are, just like you see all of the Bitcoin ETF offerers, all of the Ethereum to be spot ETF offerers, they all offer other products, just not in the US yet. They will eventually. And actually, when I look at others' dominance, it looks a little bit shaky. And I think that's because the bigger caps are going to get through first, of course, and there's going to be a kind of consolidation of liquidity there, perhaps. So the decision follows a letter sent on the 7th of June asking the SEC to confirm that the May ETH ETF approvals, which were premised on Ethereum being a commodity, meant the agency would close Ethereum 2.0 investigation. It goes on to say the closing of Ethereum investigation is monumentous, but it's not a cure-all for many blockchain developers, technology providers, and industry participants who have suffered under the SEC's unlawful, preach it, and aggressive crypto enforcement regime. Our fight continues in our lawsuit. We also seek a declaration that offering the users interface software, MetaMask swaps, and staking does not violate the securities law. So this is the next step. This is going to see, I think, DeFi do quite well. So on and so forth. So this is huge news. This was the actual action itself. So we are in receipt of your letter dated the 7th of June. So this is obviously Consensus sent that letter out querying, well, if you're, hang on, you're suing us, you're going after us, but you're allowing over Ethereum being a security, but you've said Ethereum's a commodity because of the ETFs. I mean, come on. We write to provide notice that we have concluded the investigation in the above referenced matter. So that means they've closed it, basically, concluded. End of, period. Okay, so this is great news. We're not going to read the whole thing. This is fantastic. It's a huge win for this industry. And I just want to stress just how lucky people are. I know it doesn't feel like it sometimes, guys, but you've got to have a level of maturity when it comes to the markets. And we asked you the question yesterday, is this just a pullback in what is a broader uptrend for Bitcoin for the total cryptocurrency market? Yes, altcoins largely still going sideways and being accumulated for what's to come. Or is this the start of something more serious? And whenever there's a pullback in price, and we've experienced, since we got back into Bitcoin, at literally the amazing time, and I'm very light on Bitcoin. I've always been, and I am always transparent with what I hold to a degree. If you want to find out exactly what I hold, become a patron. You'll get meetings with me. We go into a lot. You know, we're in, I think, the sector, or I'm heavily in the sector of cryptocurrency that I think is going to do the best, because it's really sort of proving the capabilities of a distributed ledger. But every pullback that we've had since we got back into the market down here on the 5th of January, we've been met with the same individuals popping up time and time again, and they've been wrong time and time again. And my bet is they're going to be wrong this time. This is not a bear market. This is a bull market. The proof is always in the pudding. The proof's always in the charts. You know, we're still looking for this to set up on Total 2, taking it to $3.8 trillion. I think in less than a year's time, we might be there. And I'll be saying, I told you so. If it comes off, of course, we might. If it doesn't happen, there's no guarantees. We might be coming out and saying, "Oh, we got that wrong, guys." So wipe that smile off my face instantly. Let's talk a little bit about some macro stuff. So we said at the start of the video, generally, it has to be a good environment for crypto to do well. You know, we've seen a real correlation with crypto and risk generally, or broadly, I should say, and we'll look at that again. So this is, again, from Blockworks. It says the Fed balance sheet is bottoming. The QT tapering begins this month. But what does that mean for the markets? Now, I wasn't a big fan of the takes that they had here, but I do like the point that they raised. So the Fed has been, in the name of killing inflation, draining their balance sheet. And they've been doing it to a really, not as aggressive as the amount they printed manner, but they've been doing it all the same. So we believe, here on the channel, that we're heading into a good environment that sees the dollar, the Dixie lose strength based on the back ends of yields coming down, based on the back end of bonds getting a bid, and the correlation between bonds and markets, except for in a recession. And that's the question, that's the bullet we've got to dodge. Are we going into a recession? My answer is still no until I see more signs of it. You're in two camps. You're in the sort of, this is going to be a nightmare shit show, or the camp that we're in, which is actually, and we've been getting a lot of data to support this, inflation's coming down. You know, I think markets are going to do really well, so on and so forth. But I'll explain what I started. So we've got Bitcoin on there. We've got the SPY. We got gold. Let's put the Dow Jones Industrial Average. Recently made our target for it. And let's put these all on log. So you can see the stark correlation between the Fed adding to its balance sheet and the markets. You know, so this is risk generally, and you can even throw, I think, TLT on there, which is what we're going to do. Now, we are bullish on TLT, which means we're bearish on yield. So you can see how these typically move together. But bonds getting a bid, which I think is coming, by the way. We've said, look, bullish divergence here. You're kind of going sideways. I think this is going to get a bid. And the significance of the Fed adding to their balance sheet is that's going to be in the form of treasuries, which is going to be in the form of bidding up bonds, which is going to mean that yields are going to roll. And what leads, or what does the dollar gain its strength from? Interest rates in the recent environment. And subsequently, interest rates are driven by the 2-year yield. So if we're bullish on bonds at this point, look at all this volume here. There's more than one player involved. Accumulation. If we look at the 2-year treasuries, you know, we're taking the opposite side of the equation that I think a lot of people are taking. And the dollar. Or Fed funds is probably more of the important one that I wanted to show people. You can see these move in tandem if we put them both on log. Which perfectly aligns with our theory and what we've been highlighting, and some of the only few people to draw this channel that's been formed, by the way, ladies and gentlemen, since the Fed added to their balance sheet in 2008 to bail all the banks out. The dollar, in my opinion, is coming down to the lower bound of this channel. That's going to see risk doing the opposite. We know the correlation between the dollar and risk at the moment. So dollar rolling is going to see risk do well. So you're in two camps. You're in they're going to spike yields. They're not going to bid up the bond market. They're going to essentially allow it to continue to fall downwards. That's going to put more stress on everything. You know, you're in that camp, or you're in the camp where actually inflation's coming down. There's no issues, really. There are issues, but they're sort of being kicked down the road, if you will, like they do in this kind of economy. Interest rates coming down, dollar coming down, and bonds going up, and risk generally going up, which is a kind of, when you look at bonds going up, that means liquidity. And it can mean liquidity because everyone's running in because it's a recession, or it can mean liquidity coming in because the Fed's behind it. And we just looked at the fact that the Fed are now starting to wean off QT, and I don't think it'll be long before they start adding back to it and resuming the sort of typical regime. The Treasury is still, so even though the Fed have been doing QT, and we can see the draining of their balance sheet, which we're going to show you now, the Treasury has largely been null and voiding it. So if QT has come down from, let's say up here, 9,000 all the way down to 7. It's about $2 billion, $2 trillion. Well, since they upped the debt ceiling, the Treasury has been using the money in the reverse repo to essentially bid up the Treasury market. So they've totally kind of null and void the QT that's being done. And the Treasury is going to continue to spend. However, the Fed's likely going to step back in and sort of bid up the bond market, which aligns with global liquidity. It aligns with US PMIs, which I think we might have on today, and everything else that we're looking at. And of course, Bitcoin follows PMI cycles. You know, if there's a whole macro fundamental reason why we're bullish on the markets, as well as the beautiful thing is when we look at technically where markets are at, it aligns. So we're not just bullish for the sake of being bullish. Like, you've got a lot of channels out there that will flip bearish when the price is down, flip bullish when the price is up. No, we take a stance on where we think the markets are going over a more long-term period, and we stick to it until we see a reason to not. And right now, I'm telling you, good things are coming for the cryptocurrency market, and I still believe this is a golden opportunity, not just from a sort of fundamental regulatory point of view, allowing this industry to happen, also from a macroeconomic one. Technically, walks, talks, quacks like a duck, ladies and gentlemen. It is a duck. This is something really interesting as well. So this is interest rate payments on the $34 trillion that the Fed is, or is now the deficit for the US government, not the Fed, sorry. It's now bigger than the budget for the entire defense budget. They need interest rate cuts more than anyone. Senator Warren already trying to push JP And of course, when we look at the kind of environment that we're in, we've still got targets on Amazon. I remember everyone saying, I remember another, I'm not going to mention the YouTuber's name, leaving a comment on my video. I didn't even know who he was till then. It's quite a big one. Basically saying, why are you buying, or why are you looking at Amazon here and saying this is going to go to 263 when Jeff Bezos is selling? And look at how it's progressed since. Just like all the naysayers that were telling us no on the DAX, which made our target, that were telling us no on the NASDAQ, telling us no on the SPY, and of course the DJI, which recently made its target. These assets are all just short, basically a bet on they're going to continue to print money and ruin the fiat systems. I still think Bitcoin's going to roll, BTC DOM's going to roll eventually. It's going to be a bit of a pain. But that's really it for me, guys. So I wanted to cover a little bit on the macro. We're not just bullish for the sake of being bullish. We're not just bullish because people want to hear it. You know, in 2022, we were one of the biggest bearish channels, which was a hard pill for me to swallow as somebody that had a name like Allincrypto. But, you know, I see every reason to be bullish on the markets. I see every reason to suspect the cryptocurrency industry is going to do insanely well. Pullbacks are pullbacks. You're going to get them. If you understand the broader context of the markets, you understand market cycles. We are releasing a course specifically on market cycles and how you can understand them, and actually, essentially, once you've done the quiz at the end, you'll be able to prove to yourself that you can predict potentially what's likely to come next for a market. Do sign up to the newsletter for that. You will get a discount. Also, become a Patreon, guys, if you can. So we're bullish for good, sound reasons. Great news for Ethereum. Great news for the industry more broadly. On that note, ladies and gents, I'm going to love and leave you. If you've enjoyed this content, a like is always greatly appreciated. So is a comment, and I'll see you all in the next one. Thanks a lot for watching, ladies and gents. See you in the next.